How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel solely dedicated to investing as well as my very own personal journey to amassing $100,000 within my Vanguard brokerage account. Now, as a quick update, that account is currently sitting at $73,673.21. That is up by nearly $424.90 since my last video. Now, this all comes after a ton of market volatility, with the masses of investors being afraid of the Delta variant. Now, rightfully so, no investor really has any clue just yet on how the Delta variant is going to impact the market, which is creating a ton of volatile trading days. But honestly, those are just opportunities for investors like you and I to actually jump in, buy quality companies on sale, hold on to for the long run, especially if they're paying out dividends. Now, speaking of dividends, that is exactly what today's video is all about, where I'm going to be sharing with you the 9 different companies that paid me out in dividends during the month of July. Now, come the end of the video, I'm going to be sharing with you the monthly total I made in dividends. So make sure you watch this whole video through and through. Now, of course, just before we actually get started, go ahead, tap on that thumbs up button, as it certainly helps me out in growing the Blue Lion Finance channel and getting the word out there. And most importantly here, go ahead, tap on that subscribe button for me, because I want each and every one of you to not only join me on this journey, but take advantage of the One Hope Wines $50 gift card giveaway that I have going on right now. Now, the main rule of thumb is you just have to be a subscriber to the Blue Lion Finance channel the moment we cross over that 1,000 subscriber mark. Now, YouTube, with all of that being said, let's go ahead and get right to it. So let's go ahead and get right to it, running through these 9 different companies that paid me out in dividends throughout the month of July. Now, in the very first of the month, we had 2 companies pay me out in dividends. The very first of which was PPL Corporation, that is ticker symbol, you guessed it, PPL. Now, PPL Corporation is a utility company that was founded back in 1920. And since their founding, they have been doing an outstanding job and expanding. They've even expanded outside of the United States into the UK. So this is certainly a play that I want to take advantage of and continue to dollar cost average my way in. Utility companies across the board are typically pretty safe dividend plays, simply because, well, everyone is always paying their utility bills, and they usually do so on time. Now, with that being said, when it comes more specifically to PPL Corporation, I bought it back in those March of 2020 lows. You can see here that their stock certainly took a hit. They were trading for around $35 a share prior to the pandemic. They have not fully yet recovered. As you can see right now, they're trading for around $28 per share, making for a 25% discount if you were to buy them today. Now, when it comes to PPL Corporation's dividend, we're looking at a pretty nice dividend yield here, coming in at 5.81%. Now, I currently own 5 shares worth of PPL Corporation. That certainly didn't stop them from sending me a paycheck this month for $2.08. Now, the second company to pay me out on the first of the month was Coca-Cola, that's ticker symbol KO. Now, Coca-Cola certainly doesn't need any sort of big introduction, but worth noting, it is the world's largest, most well-known soft drink manufacturer, and certainly one of Warren Buffett's all-time favorite stocks to invest in. It is quote unquote one of his never sell companies, which gives me a lot of confidence that as a company like Coca-Cola dips, I will certainly be buying in. Now, a lot of investors out there think Coca-Cola's heyday is over. They are not worth investing in, but I would beg to differ, simply because they are a company that is just going to be here for the long haul. They are certainly not going anywhere anytime soon. Even if their dividend ever takes a hit, I don't foresee myself getting rid of Coca-Cola, only just continuing to collect on those dividends. Now, speaking of their dividend yield is currently sitting at 2.96%. As of right now, I own 17 shares of Coca-Cola, which allowed them to send me a nice paycheck for $7.27. Now, moving right along to the 9th of July, we had Omnicom Group, that's ticker symbol OMC, pay me out a nice dividend. Now, Omnicom Group is a marketing, advertising, and communications industry dinosaur being founded back in 1986. They have done one heck of a job in terms of growth, expanding into over 100 different countries with over 5,000 different clients, ranging from Apple, McDonald's, Nissan, Johnson & Johnson, Pfizer, you name it, they are probably within Omnicom Group's book of business worth of clientele. They are just doing an outstanding job. Of course, in 2020, it took a massive hit on Omnicom Group's stock share price, which is exactly why I continued to buy shares during 2020. Now, their CEO, John Wren, has mentioned recently that they're going to be seeing slower growth, especially because of the Delta variant. That took a toll again on their stock share price, so perhaps an opportunity for you as an investor to buy in. I currently only own 10 shares worth of Omnicom Group with their dividend yield sitting at 3.85%. Omnicom Group went ahead to send me a paycheck for $6.30. Now, jumping to the 15th of the month, we had 3 different REITs, real estate investment trusts, pay me out in dividends, so a massive real estate payday. The very first REIT was Store Capital, that's ticker symbol STOR. Now, Store Capital was founded in 2011, so it might not be the most mature REIT, but that certainly doesn't mean it's not successful. Store Capital has been doing an outstanding job in growing their portfolio throughout the United States, acquiring over 2,600 different properties. Now, it's their business model that attracts investors like myself and Mr. Warren Buffett over here to investing in Store Capital. Their business model calls for investing in properties that will service service-oriented businesses. So I want you to think about restaurants, auto mechanic shops, educational facilities, healthcare clinics. These are all businesses that are probably, despite what's happening in the economy, not just going to disappear. So you can certainly use Warren Buffett's analogy that this company has a moat around it when it comes to its business model. They were hit hard during the pandemic, and they're certainly trading on a nice discount right now as they have not yet recovered. As of right now, their dividend yield is currently sitting at 3.95%. I myself hold 5 total shares of Store Capital, and that allowed for them to send me a nice dividend paycheck of 72 cents. Second REIT to pay me out on the 15th was Stag Industrial. That's ticker symbol STAG. Now, when it comes to Stag Industrial, how would you like to be Mr. Jeff Bezos's landlord? Yes, how the tables have certainly turned, Mr. Bezos. Because Stag Industrial is actually Jeff Bezos's landlord when it comes to many of Amazon's warehouses. They have over 490 warehouses across 39 different states. Now, when it comes to their actual dividend, they're currently sitting at a dividend yield of 3.54%. I only recently began investing in Stag Industrial myself, holding 3 total shares. However, that did not stop them from sending me a paycheck worth 36 cents. And last but certainly not least, the third REIT to pay me out on the 15th was Realty Income. That's ticker symbol O. Now, Realty Income is one of my all-time favorite REITs to invest in. They are a monthly paying dividend company, which allows me to feel exactly as if I am the landlord collecting rent payments every single month from their tenants. When it comes to their portfolio, they have done an outstanding job in amassing a beautiful portfolio that consists of over 6,600 different properties spanning across all 50 states and into the United Kingdom as well as Puerto Rico. So talk about diversification within real estate. Now, their clients range from Kroger to Walmart, Walgreens, 7-Eleven, FedEx, Home Depot. You name it, you have most definitely set foot on a Realty Income property and you didn't even know it. Now, their stock took a hit in 2020, as most stocks did, but they fell from around $82 per share to well below that mark and have since then rebounded, but not quite fully recovered, where they're trading right now for around $70 per share, which allows for an investor to get in at a nice discount of 17%. Now, in regards to their dividend, they're currently sitting at a dividend yield of 4.2%. I personally own 50 shares worth of Realty Income, and they sent me a nice dividend paycheck worth $11.58. Now, the very next day, on July 16th, I had 2 more companies pay me out in dividends, the first being Medtronic, ticker symbol MDT. Now, Medtronic is a medical device company that was founded back in 1949. They have since then only been doing an amazing job establishing themselves as a leader within their industry, leading the way developing new technology when it comes to medical devices, prosthetics, surgical equipment. So certainly a company that is not going to be going anywhere anytime soon. I initially began to invest with Medtronic early on in 2020 once I saw their stock share price took a hit. They have since then recovered very nicely. In terms of their dividend, they're currently sitting at a dividend yield of 1.93%. I currently hold 10 shares worth of Medtronic, and that allowed for me to receive a nice paycheck of $6.30. And then we have Brookfield Renewable Partners, ticker symbol BEP. Now, Brookfield Renewable Partners is a Canadian-based renewable energy company that was founded in 2011. Now, most impressively about Brookfield Renewable Partners is the very fact that although they are young, they currently operate the world's largest renewable energy platform, which is insane to think about and one heck of an investment to actually invest in given the green revolution that we are currently living in. Now, I can only foresee growth in the decades to come when it comes to Brookfield Renewable Partners. Their dividend yield is currently sitting at 1.46%, and I myself hold 36 total shares worth of Brookfield Renewable Partners, which allowed for me to receive a nice dividend paycheck of $2.38. And last but not least, we have a nice dividend paycheck that was cut and sent to me on behalf of my investment within the S&P 500 high dividend, low volatility ETF, that being SPHD. Now, this particular ETF allows me to invest in a multitude of high dividend paying companies. So think ExxonMobil, Iron Mountain, AT&T, Altria Group, various REITs, you name it. If they're a high-paying dividend company, they're probably within this ETF. But I currently only own 3 shares worth of SPHD because I only really buy it when I really cannot find a dividend-paying company at an attractive price. Nonetheless, I received a paycheck for that investment for 34 cents. And that is it. Those are the 9 stocks that paid me out in dividends throughout the month of July. Now, for the moment we've all been waiting for, the monthly reveal. YouTube, get that round of applause going. I can't hear you. There we are. We brought in a grand total of $37.33 during the month of July, which is absolutely insane considering I have done nothing but sit on quality investments and just allow them to send me those paychecks. That is the power of dividend investing and why I absolutely love dividend investing. It is the easiest form of passive income. Now, with that being said, if you liked what you heard, you learned something new, go ahead, smash that thumbs up button for me, as it certainly helps me grow the Blue Lion Finance channel and getting the word out there. Certainly take advantage of the giveaway and join me on this journey by smashing that subscribe button for me while you're at it. Now, YouTube, until the next video, I will see you all there.